Hello everyone, my name is Stephen Fox. Welcome to my channel. The CPI on Tuesday torpedoed the stock market. Fortunately, I had stop limit sell orders in place, which saved me. So I have saved $300,000. I've made $300,000 in the last 2 months on artificial intelligence. I'm not going to lose that on a poor CPI report. It came out worse than they expected. There was much talk about there being a 2 handle on the inflation CPI number, the Consumer Price Index, and it came in at 3.1%, which was well above the 2.9% that was expected. The 3.1% was still better than the previous month's 3.4%. It really shouldn't have been that big of a disappointment. But there was underlying numbers in the core features of inflation. The core inflation number, which excludes energy and food, just the basic things you need to live, it excludes those. That remained the same at 3.9%. It was also 3.9% the month before. Worse than that, instead of going up 0.3% like it did the month before, it went up 0.4%. The headline number, the headline inflation number, instead of going up 0.2%, it went up 0.3% when only 0.2% was expected. There were some underlying things that made us think that this is a worse inflation number. There's some suggestion that the numbers were manipulated to an extent for seasonal adjustment factors, which made the numbers look worse than they really are. But you never know exactly how that affects things. And we usually have to go along with the seasonal adjustments, assuming that they know what they're doing, which it could be a precarious assumption. Also, it's thought that because of the different way that it's calculated, that the personal consumption expenditures, which is coming up, that will be more favorable and will show lower inflation. We got to weigh these things together. The Federal Reserve likes the personal consumption expenditures, the PCE, better than it likes the CPI. That's in our favor. So on the surface, the Consumer Price Index, the CPI, was actually kind of good news. It decreased to 3.1% on a year-to-year basis over the 3.4% the previous month. That should have been good. But when they look at the core prices, and a lot of that was shelter. Shelter increased 0.6%. And that was 2/3 of the increase in inflation for the month of January. They're very concerned about the inflation prices. They're concerned especially about the core inflation prices, and they're especially concerned about what they call super core. And the super core is basically services. Paying your plumber, paying your barber, things like that. Any services you receive, that inflation seems persistent. Looking at the chart, you can see that the core inflation spiked up somewhat over the past couple months, but the super core, what you pay for services, has especially gone up. You know, I can relate to this. I recently had a plumber come to my house. He handed me the bill. I said, "Oh my God, this is more than what my medical doctor charges." He just looked at me and said, "Well, when I was a medical doctor, I didn't charge that much either." Of my 7 artificial intelligence stocks, I have like 3 categories in my mind. Nvidia and super microcomputer are my superstars. They behaved like superstars on this CPI disaster on Tuesday. Nvidia went from 722 to 721. It lost 1 point. Okay, big deal. Super microcomputer, they named that stock right. It actually went up 18 points. That stock is going to drive me crazy. it has such wild movements from day to day. But I think I might have to bite the bullet at some point and jump back in tomorrow. We will see how the market is faring then. The next three stocks are my three A's, and they start with A for a symbol. AMD, Advanced Micro Devices, it more or less stayed flat for the day, but it's been pretty lackluster, and it's probably the one of the five I'm the least excited about. I was happy to get rid of it for now. I will jump back in on all of these. I'm just waiting for the time to pounce. AVGO, which is Broadcom, it went down about 1%, and ASML went down about 3%. I'm going to get back into these as conditions permit. I'm feeling like the market needs some time to settle down, and it's settling down from the artificial intelligence explosion, and it's deciding whether it's going to continue on. I think, too, we're having this drawdown before Nvidia reports earnings on February 21st, and that not only will set the tone for artificial intelligence stocks, I think that'll set the tone for the entire market. I'm going to be debating whether to sell the news or to buy more before Nvidia's earnings. It's going to depend a lot on how it moves before the 21st. And looking at the chart, you can see for the last week how my fabulous 5 stocks have done. And Super Microcomputer has made 16%, and Nvidia has made a solid almost 6%. Advanced Micro Devices and AVGO, Broadcom, made around 2%, and AMD was basically flat. It lost a fractional amount. And I'm showing you the 1 month chart on Insight Enterprises and Vertiv Holdings. Insight Enterprises is NSIT is the symbol, and Vertiv Holdings is VRT. Insight Enterprises has more or less held steady during the month and has made about 3%, while Vertiv, it's more volatile, but it's been generally up for the past month, and it's up almost 24%. I'm continuing to watch these. I may be adding them solidly. I'm planning to get back into them again. I'm just waiting for conditions to be right. The best condition would be that Nvidia reports blowout earnings, and then I'm going to go into all 7 of these full force. Thanks for listening and watching. Be sure to return, see how this all pans out. Flip me a like if you think I've added to your information for the week. Good luck to us all.